Chetan, always great to have you with us, and perfect timing because you think we could get 50 basis points at month end. Why?
Absolutely. Look, the reality is you've got global economy that is weak. You've got downside in the US growth already, which is visible. You've, in terms of outlook, got a lot of downside risk, particularly coming from the global side. Core PC inflation is at 1.6. Why not deliver what the economy needs right now? Forget about tomorrow.
It's a big call, and some people are pushing back because they haven't seen so far, at least from the Fed communication, even from the most dovish policymakers, that 50 basis points is on the table at the end of this month. Why doesn't that matter?
Look, we've gone back in time and looked at the transcripts. If you do it in time, at the initial stage, the first cut is always the deepest. And you get more bang for the buck if you do a 50 bips cut. If you do 25 bips cut, you wait for the data to get bad, and then you react. It's a reactive response, and it takes a risk that you could have a moment where financial markets can go non-linear, and that could have a non-linear impact on the economy. So from a risk management perspective, I think the central bank's job is to prevent that non-linearity, and they will probably have to take up that aggressive decision of 50 bips.
Nisha, what are your thoughts on this big call?
Yeah, so I think rates have been significantly higher previously, right, when we've kind of come into a recessionary period and a downside period. So the Fed has a lot less to work with. I think a 50 basis point cut would be too aggressive, uncalled for. I do think that after the Fed minutes and kind of looking at some of the details, the words downside, the words uncertainty are sprinkled a lot more often in kind of yesterday's release. So the 25 rate cut, I think is going to happen, but I think that will leave a little bit more ammo on the table for the Fed to work with later.
Julian, you and the team came out super early this year looking for 2 rate cuts. You were looking for 50 basis points. That was back in spring of this year, back in April, I believe. Has anything changed for the team?
No, we still see 50 basis points cumulatively in 2019. Look, could they do 0, 25, or 50 on July 31st? I think all three are a possibility. But from our point of view, and we do not think that they'll do 50 because, again, there's this whole idea of political independence that needs to be defended, is the idea that even if they did do 50, it would be, I'm not going to promise you too much more after that. And the market is already looking towards 4 cuts between now and mid next year. That's probably too much.
Well, the consensus view is that we get around 75 basis points worth of cuts before the end of the year. The debate really is how that's served. And Chetan, you think a lot of it's going to come up front. You've touched on something really important, the limited amount of ammunition this Federal Reserve has to respond to a downturn. And for that reason, you can't wait for the downturn to materialize. Is that the essence of the call here, Chetan?
Absolutely. And if you remember, there was this big conference on June 4th and 5th, and we were talking about inflation expectations to be also addressed. And we know that there are problems on inflation expectations in all of the DMs. So just for the fact that inflation expectations have already slipped, you have actual inflation running at 1.6%. And if the growth outlook is not looking good, you have to address this upfront. You can't just wait for things to lose control on inflation expectations.
And it's